Good morning, good afternoon, good day. Welcome to my midweek market meetup, 11th August 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. This is my email ID, my website, YouTube channel, and Twitter handle. I regularly share live market and stock analysis on these channels. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They run on the underlying TradeStation and Metastock platforms. That was the last slide of the presentation. Let's continue with the live system, starting with a look at the global markets. First, we use Australian index AXJO. AXJO is in an uptrend both in weekly and in daily. In daily, it is above the upper boundary, and today's daily candle is indecisive in shape. It is overbought, shown by the stretch band indicator for many days. Bullish but overbought. Japanese index topics. As was true in my last webinar, topics is moving inside a triangle pattern in both weekly and daily. China CSI 300 index broke below support at this point, recovered in daily right to the trendline resistance, still having lower low and lower high. Now if price can come down from here, gives us a magenta candle that may give a go with flow setup, short setup, as price will be coming down from the yellow direction line. That may also give us a pull down short setup. Australia market was in an uptrend, Japanese market was sideways, Chinese market is in a downtrend. UK market FTSE index. This is moving sideways. The range is bound by watermark resistance at the top and watermark support at the bottom. It also has trend line support and white direction line support at the bottom. It is moving inside a box. And India's Nifty 50 index. This is moving in an uptrend. However, not looking as strong as the Australian market. It broke out of the range like Australian market, and then it is moving sideways for 5 days now with indecision shape candles for 5 days and also two indecision at the top signal within 5 days. The weekly also has indecision at the top signal, indecisive shape signal. One may be cautious if one is holding long positions in the India market. It is overbought for many days. The global markets have a mixed picture. Australia and India still in an uptrend. Japan and UK are sideways and China market is in a downtrend. What about the USA market? S&P 500 ETF SPY in an uptrend in weekly. However, this week so far it has indecision at the top. The candle is a doji candle and backdrop color is bearish. In the daily, for several days it has very narrow range days and we have indecision at the top as well. It is gradually moving up, but very gradually, very slowly moving up. The uptrend is not strong. That is seen from this very gradual up move in SPY. It is near the upper boundary. I will avoid buying at this point. Instead, if this trend line support can be broken, I may look for a low risk shorting opportunity. QQQ, this is also moving sideways for last couple of weeks, practically moving sideways. Overall, it is in an uptrend, no doubt about that. Again, the up move for the last couple of weeks is very slow and gradual, has multiple indecision at the top. Yesterday's traffic light candle color is bearish. So far, this week's backdrop color, weekly color is also bearish, but it has a trend line support. Unless that is broken, I am not going to consider shorting. In the band indicators, I see the reversal candle, bearish reversal candle came yesterday. That came at price extreme or pendulum high. That is a signal to be cautious. It is inside a squeeze, Q squeeze now. If the trend line is broken, then there is reason to be extra cautious. Dia, the weekly candle color and shape both are bullish. Daily is again going up, but very gradually going up like SPY. Though the weekly color is bullish, showing that for this current week, Dia is stronger than SPY and QQQ. Over longer term, the relative performance is coming down, so it is underperforming the market. There is a trend line support right below yesterday's close. If that trend line is broken, there are other trend line supports nearby. Therefore, even if the immediate trend line is broken, I am not going to look for shorting opportunities in Dia. Lastly, IWM. This is the only USA market ETF that is moving sideways for many months. In the daily, it is moving inside the box, and inside the box, it is moving inside a much narrower triangle pattern with many indecision shape candles and many indecision at the top signals. This is showing extreme indecision, underperforming the market. If this trend line support is broken, there is reason to be extra cautious. The next trend line support, that is the lower edge of the box, is some distance away. If the first trend line support is broken, that may give us a shorting opportunity in individual stocks. IWM is the weakest. Like the global markets, the USA market ETFs are mixed. However, none of them are in a downtrend. IWM is clearly the underperformer. It is moving inside a box for many months now. In fact, since the first bearish headwind came here, which was in late February this year. Since late February, now we are in middle of August, it is moving nowhere. The other market ETFs are going up, but gradually, very gradually, so much so that it is not easy to swing trade stocks profitably. One has to be extra agile to go in and out of trades quickly to book profit. However, there are some trades, some stocks that are giving valid Q setups and they are exiting with profit as well. I will go through some of the stocks I shared earlier, but let's look at other aspects of the market first. First, having a look at the 1 month to 1 day sector industry stock advance decline. Not so long ago, this breadth inside was mostly red, and now it is green across all the periods. If the flip-flop continues, then I expect the color for 1 day and 2 day periods to change to red, and maybe the other periods also to change to red if the flip-flop continues. What about bucket analysis? If we took all the S&P 1500 stocks, distributed each stock in a band 1 to 10, depending on where they are inside their Bollinger Bands, equidistant 10 buckets, and put the stock in greater than 10 bucket if it is above upper Bollinger Band, put it in less than 1 bucket if it is below lower Bollinger Band, calculate the percentage for each of the buckets, then we get this histogram. And this is calculated in real time during market hours. Currently, it is showing the end of day data as of Tuesday's close, and it is comparing Tuesday's data with Monday's data, day 1 versus day 2. Current day's data is in the bright colors, these green lines, and previous day's data is in the lighter color. We can see overall the area of the histogram is bigger to the right of the midline. That is showing that overall more stocks are above midpoint of the Bollinger Band. We can see that from this percentage also, 66% of stocks are above the midpoint of Bollinger Band. 1 day earlier it was at 61%, so it had a gain of 5% stocks crossing over the mid Bollinger Band. In terms of bucket analysis, the market is overbought when the percentage of stocks in the uppermost bucket reaches 30-40% or so, but currently it is only 12%. So it has more room to go up before it becomes technically overbought. Another fact I have observed that if in one day the percentage of stocks in the most extreme bucket jumps by 10% or more, then it is as if it is spending too much fuel to go up too fast and it may need time to pause. Yesterday, it jumped by more than 10%. One day ago, the percentage of stocks in the most extreme higher bucket was 2.6%. From there, it jumped to 12.8%. So it was a jump of 10.2%, more than 10%. Sometimes it can even hit 20%. That is even more exhaustive condition, but even greater than 10% is something to take note of. Another thing to note is that while the percentage of stocks in the uppermost bucket went up, the percentage of stocks in the lowermost bucket also went up by a smaller percentage, but it did go up. And if you are using this bucket analysis in real time or after market hours every day, you would have noticed this occurrence several times during last couple of days. What occurrence? That is the percentage of stocks in the lower extreme bucket, lowest extreme bucket is going up, while at the same time the percentage of stocks in the uppermost extreme bucket is also going up. That is a sign of some weakness under the market. The strongest stocks are remaining strong in a way, while weaker stocks are falling down. It is not the situation that we may buy any stock and it will give us profit. This bucket analysis, especially the percentage in the most extreme buckets and how it is moving from day to day, is showing us that we have to be cautious in selecting stocks. In Q technique, we are allowed to do that. We are in fact able to do that. As per the guideline, we use 360 degrees analysis and buy only stocks that are strong in terms of fundamental, technical, industry score, industry strength, as well as now seeing whether funds are accumulating the stocks or not. Overall, currently, both the bucket analysis and the sector industry stock advance decline rate, they are bullish, and if the flip-flop continues, they may turn bearish now. We'll see if that happens and we'll be able to find that out in real time. Now let's look at technical breadth using Q Finder. First, the weekly interval. This shows the balance between bullish and bearish signals. All signals slightly bullish, balanced to a large extent. Same is true for trend continuation signals. Strength signals slightly bearish, reversal signals more bullish. Reversal signals are more than gap signals, gap down or gap signals. Therefore, in this case, the strength bearish associated with reversal bullish makes the combination bullish. And in any case, all signals are slightly bullish. There is some number of bearish headwind signals in the weekly interval, but that is not at the 2% level yet. And the daily interval, yesterday's technical breadth, balance between bullish and bearish signals, all signals bullish 60%, strength signals also bullish 53%, trend continuation, trend reversal. All the categories are bullish yesterday. So far, from every aspect, the market is looking bullish. What about the internals? I study the market internals every day using Q Global Market Breadth. Let's have a look at that, starting with the composites. Nasdaq and NYSE composite, it has multiple studies. I look at the key ones, starting with the percentage of stocks above 50 MA. For Nasdaq, it is around 35%. For NYSE, it is around 46%. Therefore, Nasdaq as a whole is weaker than NYSE. Though QQQ had been super strong, under the hood, Nasdaq, the technology exchange, is weaker than NYSE. And for both Nasdaq and NYSE, the yellow line is coming down below the 50% level and below the average line. Coming down below the 50% level, below the average line. So it is showing gradual weakening of the market, broad markets, though SPY, QQQ, DIA are near all-time highs. That's why these breadth insights are very useful. They show us whether really the market as a whole is strong or not. And we are seeing that it is not strong under the hood and showing clear divergence between QQQ SPY and the yellow lines. That is the percentage of stocks above 50 MA. And if I change the interval to weekly, change to weekly now, we see the divergence, bearish divergence between advanced decline, up down volume, and the major ETF prices. Very clear bearish divergence, and we have observed in the past that this bearish divergence always appears before the market comes down. So this is a reason to be cautious. Doesn't mean market will come down, but every time market comes down, the divergence appears before that. And if you look carefully, you will see that in terms of bearish divergence also, Nasdaq is looking weaker than NYSE. That helps us in deciding what kind of stocks to buy and which kind of stocks to not buy. The weakness is also clear from the new high low. You can see the new high low for Nasdaq is becoming more red below zero than NYSE. Not as weak as advanced decline up down volume, but still relative to NYSE, Nasdaq is weaker. So almost from every aspect from this breadth study, Nasdaq as a whole is weaker than NYSE. And now we look at the extremely valuable single chart USA market breadth total view. It combines the insights from the two exchanges and the four major indices. Here also the yellow line is gradually coming down below the average line, just above the 50% level. The fact that it is coming down and below the average line is showing that under the hood, the market as a whole, combining the exchanges and the mega caps and all the market indices, it is also weak under the hood. At the right edge, I am looking for Hindenburg, there is none. Looking for large distribution count, at least 2 or more, there is none. Looking for Phoenix or Bingo even, there is none. That is why I am continuing with the view that though under the hood the weakness is clear, both from composite studies and from this market breadth total view study, though the under the hood weakness is clear, I am still not expecting that market will drop sharply and suddenly. The preferred direction of trading is still bullish, just that we have to be extra cautious in taking the trades and may need to be more agile to enter the trades quickly and exit the trades quickly. What kind of stocks are in favor? And I am sharing this in every webinar. That seems to be changing. The magenta line, growth versus value, it was earlier going up. Growth was doing better than value. Now it flattened out. First it broke the trend line support, then it flattened out, and at the right edge it seems to be rolling over. So growth is relatively weakening now. And the cyan line, small cap versus large cap, there seems to be a change in heart there also. The trend line resistance was broken. Small cap was doing poorly. Now the trend line is broken and it is moving sideways. Small cap and large caps are equal performing now. If it can tilt up, then small caps will start to do better than large cap as a whole. This also helps us decide what kind of stocks to look for buying. It seems that it is better not to go for growth stocks now. Value stocks seem to be gaining favor and smaller cap stocks seems to be gaining favor, relatively speaking. We looked at the market from many angles, from the global markets, from the USA market ETFs, sector, industry, stock, advanced decline breadth, bucket analysis, technical breadth, and market internals. From all angles, market is bullish. Under the hood, there is weakness, but it is still remaining bullish. We may continue to buy, but be cautious. Let's now look at some of the stocks that I shared in recent days. The market is flip-flopping. We are observing that from the Q edge, sector, industry, stock, advanced decline breadth, becoming green sometimes and then switching back to red and then again turning back to green. When the market is flip-flopping, one way to trade is to see when fundamentally strong stocks are dropping suddenly, hitting trendline support, and we may use the extreme rise in option volatility right at that point to sell puts. Of course, options trading is more risky than stock trading because of the leverage that may be involved. If you use naked options, then leverage is high. That is, if you buy naked options, leverage is risky. If you sell naked options, then it is risky because there may be a large loss if the stock moves a significant move. Therefore, if you are trading options, you may be learning it first, practicing it on simulation probably, and also refer to the Option Industry Council documents on options explaining their risks. Now, I shared one tactic a few days ago. a well-known tactic of shorting the put when well-known fundamentally strong stocks drop suddenly. Let's find that post. I think General Motors was there. Let's search for them. This one. I share all my analysis. Let me show where I share it. On my website sagarnandi.com, there are several categories. I share my live analysis always before knowing the result under the category Q360 degrees trading techniques and ideas. These are not supposed to be trading tips but a disciplined way of swing trading stocks. And I shared this post 7 days ago. An income strategy shorting puts in fundamentally strong stocks, entering bullish trades when stocks are down. You may use this technique only if you are willing to hold on to the stock if the stock comes down. Of course, because you are shorting put, you will be able to buy them at a lower price than when you are entering the trade in case the stock comes down. And if the stocks go up, the technique suggests, at least my approach is to exit the trade at 50% of max profit. And I shared this idea on August 4, 7 days ago, on these stocks. Let's look at these charts today. I shared it on 4th August. Let's look at all these stocks today one by one. Let's put it here. ANFGM, BGFB, AXL, BKE. BGFB, AXL, BKE. Let's look at BKE first. On this day, I shared the idea about shorting the put. That time price dropped sharply, came right at the trendline support. And I had shorted the put at that time. I shorted probably this next trendline support. The volatility is higher if you go out of the money little bit. If you go out of the money too much, the premium may be negligible. So I am not suggesting going out of the money by that distance to the white direction line. Premium would be negligible, but you could go out of the money to the next trend line support. Those premiums were very expensive. I shorted the put, and as soon as I entered the trade, I put my GTC exit order, good till cancelled exit order, at 50% of the max profit. And yesterday I was having a call with one of the Q traders. My GTC order was in play, and I could hear the sound of the trade exiting with profit on this day. So in 1, 2, 3, 4 trading days, somewhere in the morning session, the BK short put trade exited with profit. And I entered it, I may say, on the best possible day. And BK's fundamentals were very strong. I shared it in the post when I entered the trade. Let's review the posts. All these stocks were undervalued stocks with high earnings growth, with high revenue growth, plus with fund accumulation. So they were crown jewels in terms of Q analysis, and funds were also buying it. though all these stocks were down by at least 5% or more, using the fundamentals and the technical supports nearby and the extreme rise in implied volatility, I decided to short the put in all of them. And you see, I selected extremely strong fundamental stocks so that in case they came down, expired below the short put strike, then I would be okay to hold on to them. And if I got assigned, I could probably sell calls against them. Anyway, I didn't have to do that. I exited most of the trades by yesterday. Let's look at all of them. BKE was one, ANF. I shared the idea on this day. Yesterday, again, the short put exited with 50% profit in 4 trading days. General Motors, I shorted the put on this day, and in this case, I didn't even have to wait till yesterday. Right on this day, 2 days after entering the trade, it exited at 50% of max profit. BGFV entered the short put on this day when price dropped suddenly, came to trendline support. This also exited at 50% of max profit yesterday. And lastly, AXL, I entered the short put on this day. After that, it went down little bit, but because I shorted the put on the most volatile day, I was still in a profit. Yesterday, price went up. My trade was in a profit. However, I observed that now it is inside a triangle pattern. In the daily, there is immediate trendline resistance. I had a small profit, didn't hit 50% of max profit, but looking at the trendline resistance, I decided to close this trade also manually at a profit, not 50% of max profit, but with a profit. So all the trades that I shared before knowing the result, and in this case I suggested the technique of shorting the put on fundamentally strong stocks at support using Q technical charts, that worked beautifully. That's why I mentioned that there are stocks that you may be able to trade with profit if you are observing the market and using the market's flip-flop and using the Q 360 degrees analysis. Can we find some trades today? We may try. Let's look at that. Let's look at Q Finder and look for pullback setup. Why pullback setup? Because the market is flip-flopping, and this flip-flop is at the market level between growth and value stocks, between small cap, large cap, between different sectors, between different industries. This flip-flop is apparently everywhere, occurring almost every week. So when a stock comes down, hits support, starts to go up, that is the pullback setup, it makes sense to look for buying opportunities there. Let's flag the bullish pullbacks. We have these stocks that went up significantly yesterday. Let's look at them one by one. First one, VRRM. What are the signals we can read from Q Finder? Firstly, it is at price extreme high, at a high price level. Went up by 7.8% yesterday with bullish pressure with a gap up open. gave a pullback setup and also bounced from trendline support. Those are yesterday's signals. The blue color is showing that there was a bullish flow in the current week. Let's look at it. It is at pendulum or price extreme high, went up from trendline support, has a bullish flow, came to the yellow direction line and went up. That's why it registered as a possible pullback long setup. However, it went up a lot during the day and pulled down. The move up might be related to earnings. This is earnings season. We may check that out. In any case, because of the long upper tail, we would not take any long position in the stock at yesterday's close. It has broken out of this long sideways range with bullish pressure, extreme high volume. If the price continues to go up from here today using intraday fine-tune chart, one may look to buy it. But before making that decision, let's look at it using the weekly, daily and the alternate chart. In the weekly, the backdrop color is bullish, went up from trendline support that allows us to buy. Q signals we have already seen in the daily. Gap up open, bullish flow, went up from trendline support, bullish pressure, extreme high volume. In the alternate chart, HSI like signals, we can see biggest up move in 3 months. That's a very bullish signal. It also has many other bullish signals. Bongo turned green. You can see that from the ribbon also. Then pocket pivot, bullish. Mobo breakout from a squeeze with a kahuna and a viable gap up. That is probably as many alternate bullish signals you may have at the same time. It is hitting the max on that. As many bullish signals as you may possibly have on one day. So the alternate signals, the momentum signals are very bullish. Q signals are bullish. Only reason not to buy the stock at yesterday's close is because of the long upper tail. If it continues to go up, technically we are able to and allowed to buy. Let's look at its fundamentals and technicals before we complete the 360 degrees analysis. I am using the inter-program integrations using these orange color buttons to move between different Q programs. Whenever you see the magnifying glass with multiple people in it, that is for peer and fundamental analysis. My cursor is on the Vera Mobility VRRM. So I'm going to press the peer analysis button that will take the stock to Q Vital and carry out multiple calculations, first retrieving the definitive symbol or confirming the definitive symbol as in this case. Once that is done, it is retrieving detail about the root stock. Retrieve that. Next, it is retrieving the PR stocks. No data is stored on my computer, sending multiple requests one after another. And once the PRs are retrieved, it will calculate a scorecard of the PR stocks as well. We don't have to wait for that. We have the fundamental scorecard for this stock. The valuation is in the middle. Earnings growth negative, revenue growth negative, funds accumulation neutral. So fundamentally, it is not very strong. If at all, it is on the weaker side. The gap up strong move that we saw, that may be due to earnings. What about industry strength? Let's check that out. Data processing and outsourced services, the relative score came down. It was down yesterday. In itself, the industry didn't go up yesterday, so relatively it was weakening, plus it went down yesterday. To have a clearer picture, we may look at the rotation score, and that is also looking quite weak. So neither the industry is strong nor the fundamentals are strong. The gap up move that we saw and many bullish alternate signals may be due to earnings, and I would not like to buy such a stock in the current market situation. I would like to buy the strongest stocks in every respect. Let's carry out this exercise for the other few stocks that are giving a possible pullback setup. Next is Teradata, TDC. What are the signals? Went up by 4.8% at price extreme high. Similar to the previous stock, went up with bullish pressure with a gap up open. Has a possible pullback, bullish flow. If we wanted to see the alternate signals, we could also see it from Finder. Let's look for the alternate signals for Teradata. Today it has a big move up with a kahuna and a Mobo breakout. Let's look at the chart using technicals now. Q technicals. Teradata TDC. And as you can see, I am doing step-by-step analysis to identify trades that are giving buy setup from many angles. Went up from the yellow direction line, giving a possible pullback long setup, has bullish flow, bullish shape candle, bullish pressure, bullish U-turn, coming out of Q squeeze. Many bullish signals in Q chart. Let's look at it using the weekly daily template. This looking even better when I look at it using weekly daily. And notice the difference between this stock and the previous stock. The daily candle closed very bullishly. In the weekly also, it is giving very strong bullish signal in terms of a breakout from the trend line resistance, bullish backdrop, bullish shape in weekly also. Relative performance going up, is outperforming the market. In the alternate signals, we have Bongo Green, Mobo breakout. We don't have an alternate squeeze, but we have Q squeeze. So you may say that we still have a Mobo breakout from a squeeze with a kahuna and biggest up move in 3 months. That is a bullish signal. So this chart is certainly looking a lot stronger with a pullback setup, even a go with flow long setup. Let's look at it on fundamentals, TDC. Great. Instantly you can identify the difference between this and the previous stock. Undervalued stock with a short squeeze potential, fantastic earnings growth, accelerating for 3 quarters, some revenue growth, funds are accumulating. Year on year, quarterly EPS percentage growth steadily going up. Revenue is steady. Revenue percentage growth came down little bit, but it is positive. It is a 3-star candidate, undervalued with high earnings growth, and funds are accumulating. What about its industry? Relative score came down little bit. In itself, the industry was down yesterday. That is using the primary industry. If you use the alternate industry, IT services and consulting, relative score went up and the stock industry, the alternate industry, was also up yesterday. What to do under such circumstances? You may study the stock in more detail to see that which business side is more revenue generating, for example. Is it the system software kind of business or IT services and consulting? And then make a calculated assessment of whether the relative score is going down or going up, whether the industry is down or up yesterday. You may do that by making further study of what this company does. It probably has some business related to system software, some business related to IT services and consulting. If both the scores were in sync, we would not have to do much more study on the actual business nature of the stock because they are contradicting. We may do further study, and icon on which data all these queue systems are running allows me to do that study. You may do that study. Let's look at the rotation. The rotation is showing that it is weakening on the primary industry. We saw that from the graph also. If we look at the alternate industry, it is also weakening. But if we look at the alternate industry percentage, it went up yesterday. Alternate industry, I may say, if you look from this period, it is weakening. If we look from 5 day to 2 day to 1 day, slightly improving, shown by this slight improvement in acceleration. But in any case, I wouldn't say that the industry is strong, neither in terms of alternate industry and certainly not in terms of primary industry. So we found a stock in this case that is better than the previous stock. This is Teradata TDC. Technicals are looking okay. It's giving multiple trade setups. Fundamentals are great. The industry is not so strong, but it is certainly better than the previous stock. Let's see if I can find a stock that is having strong industry score, strong fundamental, strong technical. Let's try to do that. Go back to the other stocks. Let's open all of them together. First close the existing charts. And this step-by-step disciplined analysis, I may say, is invaluable in making profit consistently, especially in the current market condition. You may buy only the strongest stocks, and I share regular examples of that on my website, like I did with the short puts. Now I'm trying to look for stock buying candidates. This is Philip Morris. The candle has upper tail, so I'm not going to consider buying. Close this. COKE, Coca-Cola, went up from the yellow direction line, but it has upper tail. The candle shape is indecisive. Not going to consider buying now. Close this. HZO, Marine Max, went up from yellow direction line, pullback setup. However, has trend line resistance. Not going to consider buying it. Close this. eBay regained the yellow direction line with a bull release signal after a pull down. Interestingly, the pull down happened right after the bearish headwind at the top. Let's look at it using the 3 chart template. The weekly shape is bullish, color is bearish, that's fine. A pullback setup comes after the price pulls down more than what we would expect in a go with flow setup. Therefore, the backdrop can be magenta, that is fine. The daily is giving a pullback setup with bullish pressure, bullish U-turn, bull release signal, not very high volume but high volume. In the alternate signal, not many bullish signals here. We saw an extreme opposite in TDC. TDC had many momentum signals. eBay doesn't have it, but it is still giving a possible pullback setup technically with Q pressure U-turn, bull release, high volume. So we are allowed to buy technically. Let's look at its fundamentals and industry strength. This is a 3-star candidate again. Instantly we can see that undervalued stock with high earnings growth, in fact high revenue growth. So this is a crown jewel. This is a crown jewel. Funds are in the middle, not cyan, not magenta, in the middle. But in any case, it is not only a 3-star, it's a crown jewel. Earnings growth, revenue growth, both are there. Let's look at its industry. Here the relative score slightly came down, but it is holding on to a higher level. The alternate industry score is also steady, went up yesterday by a large percentage for primary industry. Alternate industry also went up. If both of them are in sync, I usually only look at the primary industry. In itself, it went up strongly yesterday. Let's look at the industry rotation score. This is much more bullish. Improving also. 1 month period was magenta, now it is much more cyan. So now we have finally found a stock that is in a strong industry, internet and direct marketing retail, has fantastic fundamentals and is giving a pullback buy setup. So of these stocks that I went through just now, I would prefer to buy eBay. If I decided to buy any one of them, eBay would be the correct choice. The stop is also narrow, just below the recent low. Stop would be just here. We may decide the exact location for the initial stop using the Q protection signal. It calculates the stop level based on volatility of the stock, price volatility, and the stop is narrow, as you may see. So we found one buying candidate. There are buying candidates like that, not always easy to find, but there are few. And yesterday when I was talking to few traders, I shared some of the ideas. Okay, let me open them using the 3 chart template. I didn't share it before, and I am not sharing it as a trading idea now, but I'm showing that there were buying ideas earlier. I'll spend 2-3 more minutes only on that. EMRC. This was no, not EMRC. Okay, I forget OMC. This is one stock. This is a very familiar setup for Q traders like me. Weekly came to trendline support after a significant drop. Drop started from bearish headwind. All these signals come together very nicely. After this big drop, it came to the trendline support and stopped there. Started to go up with indecision at the bottom. And in the daily, it came to the white direction line and started to go up, displayed a bullish headwind at the bottom. So we had a weekly bearish headwind at the extreme high. Now we could use the bullish headwind at the extreme low as a reversal signal. So in fact, on this day, I took a long position. By yesterday's close, I have reasonable profit. I could enter the trade during the day. The market is looking weak under the hood, and it has trendline resistance. So if it goes to the yellow direction line or trendline resistance, one could book profit, at least partial profit. And if the price turns down from here, one could make sure that doesn't turn into a loss. And another stock was there. Was it ERM? Let me see if I can find out from QH if it is part of S&P 1500 stocks. OMC that I shared just now. Okay, let me share OMC's fundamentals, great fundamentals. So I was only looking at stocks that had great fundamentals. So let it calculate the fundamental score. Let me see if I can find the stock starting with E. M. No, I don't seem to find the other stock. No, never mind. Let's look at OMC's fundamentals. Again, you see, I selected stocks that are super strong in terms of fundamentals. Great valuation, great great earnings growth, great revenue growth. So crown jewel plus funds were accumulating. Earnings growth year on year, revenue growth year on year is sharply going up. So you are able to find such stocks. We found one today, but not easy to find those stocks, and you may be extra cautious in the current market condition. But Q techniques, as you may find out from this live analysis, allows you to be cautious and yet find stocks that are strong from every angle. We are at 1 hour point. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in our next session, which will be sometime on Saturday probably. I will notify the exact time, date and link on Twitter page. And if you are subscribing to YouTube channel, you will get notification from there also. Thanks once again. Keep safe. And as I always say, no reason not to do so. Trade profitably.